Most beginners don't lose money because trading is hard. They lose money because they're doing the wrong things from the very beginning. Listen carefully. If you've ever taken a trade, watched it go against you, felt frustrated, and thought, "What am I doing wrong?" This is for you. Because the truth is simple. You're not unlucky. You're not too late. You've just never been shown how trading actually works. And until you fix this, you will keep losing before your first real profit. Here's the truth about why beginner traders lose money. It's not the market. It's the way you approach it. Most beginners enter trading with excitement, but no structure. They open charts, watch a few videos, maybe follow signals, and start clicking buy and sell. No plan, no rules, no system. And that's where the losses begin. This is where most traders fail. They think trading is about finding the perfect entry. But trading is not about one trade. It's about a repeatable process. Without that, every trade becomes a guess, and guessing in the market is expensive. Now, pay attention to this. The first reason why beginner traders lose money is because they trade without a plan. They enter trades based on emotion, a strong candle, a sudden move, a feeling. But here's the problem. If you don't know why you entered a trade, you won't know when to exit it. So what happens? You hold losers too long. You close winners too early. And over time, your account slowly bleeds. The fix is simple, but most people ignore it. Before you enter any trade, you need three things: your entry, your stop loss, your target. No exceptions. If you can't define these before the trade, you don't take the trade. That one rule alone can save your account. Now, here's the second reason why beginner traders lose money. Most beginners have no risk management. They risk too much on one trade, maybe 10%, maybe 20%, sometimes even more. And when that trade loses, which it will, their account takes a massive hit. Then what happens next? They try to win it back, faster, bigger, more aggressive. This is where accounts get destroyed. Listen, professional traders don't focus on winning big. They focus on not losing big, because survival is the real game. Here's the rule you need to follow. Risk only 1 to 2% per trade. That means even if you lose 5 trades in a row, you're still in the game. You're still thinking clearly. You're still in control. And that changes everything. Now, the third reason why beginner traders lose money: they chase the market. They see price moving fast, they feel like they're missing out, and they jump in late. This is called FOMO, fear of missing out. And it's one of the fastest ways to lose money in trading. Because when you enter late, you're buying from smarter traders who entered earlier. And guess what they're doing? They're taking profits, while you're just getting in. So price pulls back, and you're instantly in a losing trade. This is where most traders panic. But here's the shift you need to make. You don't chase price. You wait for price to come to you. You wait for structure, support, resistance, pullbacks. You wait with patience. Because in trading, the best trades come to those who wait. Now, here's another mistake beginners make. They rely on too many indicators: RSI, MACD, moving averages, random tools everywhere. And instead of clarity, they get confusion. Signals contradict each other, decisions become harder, and hesitation increases. This is important. Indicators are not the problem. Overcomplication is. You don't need 5 indicators. You need one clear idea: price action, market structure. Where is price going? Where is it reacting? Where are buyers and sellers active? When you understand this, everything becomes simpler. Now, here's the deeper issue. Most beginners focus only on making money. They don't focus on becoming a disciplined trader. And that's why they fail. Because trading rewards behavior, not intention. You can want to make money, but if your actions are emotional, impulsive, inconsistent, you will lose. So here's what you need instead: a simple, repeatable system. Let me break it down for you. This is your beginner trading framework. Step 1. Identify the trend. Is the market going up, down, or sideways? You only trade in one direction, with the trend. This alone increases your probability. Step 2. Wait for a pullback. You don't enter at the top. You don't enter at the bottom. You wait for price to retrace into structure. This is where better entries happen. Step 3. Look for confirmation, a reaction, a rejection, a signal that the market is ready to move again. This could be a simple candlestick pattern, nothing complicated. Step 4. Manage your risk. Set your stop loss, set your target. Risk only 1 to 2%. No exceptions. Step 5. Do nothing. Yes, do nothing. Let the trade play out. No moving stop loss randomly. No closing early out of fear. You follow your plan. This is how professionals trade. Not perfectly, but consistently. Now, listen carefully. This is the identity shift you need to make. You are not here to win every trade. You are here to execute your system. Because once you focus on execution, results take care of themselves. This is where everything changes. You stop chasing. You stop guessing. You stop reacting emotionally. And you start trading with clarity, with structure, with confidence. That's how you move from a losing trader to a disciplined trader. And this is why beginner traders lose money. Not because the market is against them, but because they've never been taught how to approach it the right way. Now you know. So the question is, will you keep trading the same way, or will you start applying this? Because information alone doesn't change results. Action does. If this helped you understand why beginner traders lose money, then you're already ahead of most traders. Subscribe to Online Trading Hub for more lessons that simplify trading and help you build a system you can actually trust. And remember, you don't need more trades. You need a better process.